Joining me now is Andersen Capital Management Chief Investment Officer Peter Andersen. Peter, great to see you. Thank you so much for being here. Your reaction from a record high stock market to the lifeline the U.S. is giving Argentina?
It is amazing, you know, Maria, trying to factor in all these changes and policy instruments that the president has put in the first term is very challenging to investors. And I think that investors will actually welcome that because that kind of support really does raise a lot of enthusiasm for the markets. And certainly this is a first-time intervention, and I do think it will be positive for the markets in general. There's a lot of other things, though, that I think are driving market sentiment beyond that.
What's driving things? Because we are on the doorstep here of third quarter earnings season. We've already heard from Delta and PepsiCo posting better than expected earnings yesterday. But this upcoming week is going to be all about the major banks, JP Morgan, Goldman Sachs, Citigroup, Wells Fargo, and BlackRock, all reporting their third quarter, and then it's off to the races in terms of third quarter earnings. Peter, what are your expectations for the third quarter earnings season?
I think there's a lot of pressure, more pressure than ever, to have some results of business plans with artificial intelligence. All the CapEx that has been spent, Maria, somehow has to show bottom line results, and time is enemy for these companies. So they've been spending billions of dollars on this. Investors have been very, very patient, but I'm looking for this earnings season for some strong narratives and maybe some actual results, some examples of how AI is actually going to play out. The business plan of AI, we always say they have great balance sheets, right? And it's not like the dot-com bubble because of that. However, the difference with this in the dot-com bubble is the dot-com bubble might have had poor balance sheets, but at least they had business plans. You know, toys.com, you knew what they were going to do. They were going to sell toys on the internet. Here, we have really a substantial lack of business plans for all of these entities that are putting tons of money into artificial intelligence.
And so that's what you're going to be looking at, what they have to say about AI when they report their earnings then, Peter?
Yes, exactly. And they should have some incremental results. You know, are they going to continue spending on AI? And if that's the case, they really need to defend the case even more than ever because, as I said, time is wasting on this. And so far, we have not seen much. And when you talk about banks, for instance, I think banks are probably the most cautious in using AI because, of course, if you make a mistake on a chatbot for a bank, the implications are very, very much more serious than, say, a regular industrial company.
Yeah. Let me ask you about interest rates and what you're expecting here, because rates this morning are on the move, certainly. New York Fed President John Williams said that a weakening labor market could push him to support further rate cuts this year. The September Fed minutes this week showed a split on whether 2 or 3 rate cuts are coming. The yield on the 10-year now down almost 3 basis points this morning. But economists are warning the government shutdown could impact Fed policy as well over the delays of key economic reports like the September jobs report. The government now is ordering some furloughed employees back to work to publish the September Consumer Price Index, a key inflation report calculated. It also calculates Social Security payments, Peter. So they're trying to do what's needed to get this data out. But look, I've got to say, markets so far have not reacted to the government shutdown. But I spoke with a banker the other day, and he said, look, we've got a great IPO we want to go with, and we're all ready to go, take this company public, but we can't do any filings because the SEC is closed. So at some point, you've got to believe that it represents sand in the gears and slowing down progress, Peter. Your reaction to this shutdown?
Well, I think you're right with all your points. I would say as a counterpoint to that maybe it's not that bad a thing to take a forced timeout. I mean, I'd rather have a regular planned timeout. But in terms of slowing things down, even though the economic data might be delayed, perhaps that might be a good thing just for us to think about all the current situation and slow down this process. There has been tremendous pressure on the Fed to continue to cut rates. And as we're seeing, some of the Fed, it reminds me of that old movie, 12 Angry Men, where, you have some people voting on one way and finally they convince everybody else. So far, it looks like we have of the 12 Fed voters, maybe 2 of the 12 are thinking that we should continue to lower rates. So, Look, I'm hopeful that the government will certainly come back online, and they will probably revise those numbers, and I think we'll be fine. But so far, you're right. The market is still patient with this, and I think it will remain patient at least for maybe another week, and then we'll start to see more pressure on that.
Right. I would imagine so. Peter, great to catch up. Thanks very much. Peter Andersen this morning on Markets Today. We'll see you soon. And we'll be right back. Stay with us.
Thank you.